Welcome. You are watching Agronomy and Economy, and I am Ryan Buetow.
And I'm Levi Helmuth.
I'm an NDSU Area Extension Specialist in Cropping Systems.
I'm an instructor with the North Dakota Farm Business Management Program, employee of BSC.
And today is February 10th, 2016. Well, Levi, why don't you hop right into the market?
Alright, moving into the markets. Yesterday there was a USDA report that came out, and that did have some effect on the markets. Corn, we have started to see lower from the gains we had made in January. We've started to lose some of that ground here into February. And that report that came out yesterday lowered exports and raised import projections. Specifically, the supply from Brazil and Argentina increased by 120 million bushels. And that's important because in earlier episodes and from other marketers, you've probably heard talk about there's drought or flooding issues pending on the region that you're in, and we're not hearing any of those weather forecasts out of that region, especially as the southern hemisphere moves into a critical time in its growing season. So that's reflected in some of the trade. On the board, March contracts have been trading lower since the 3rd, and the last couple days they haven't wanted to drop below 359. They're hanging right around that 360. They could go lower, but and as far as to go up, I think they're going to stay around that 360. To get much above that, I think you'd really have to hear some supply or demand change that way. Into the wheat market, Tuesday's USDA report dropped exports 25 million bushels, mostly based on lower usage out of China. So that's, again, we've been hearing a lot about the economic slowdown in China since August or so, and this is still ramifications from that. Again, with the wheat, there's not a lot of weather threats on the horizon. There had been speculation about drought in Argentina, freezing issues in the Ukraine and Russia, the Black Sea region. And we're getting to the point where if it hasn't happened, it's not going to happen. Or if it does happen, it's not going to be widespread enough to have a major impact on the market. So MGX March hard red spring wheat contracts are trading at 486. Prices are near 10-year lows. So far, U.S. producers are kind of got their back against the wall. They're facing lower global demand, and we are losing some of our market share. The dollar had hit historic highs last fall, and it has fallen from those highs, but we still have a relatively strong dollar, especially when you compare it to our competitors for corn and soybeans of Argentina and Brazil. In the wheat market, we're facing a lot of competition from Russia and Ukraine. I know Russia has started to fill some of the contracts that we normally do. I know, and I think Ukraine has been filling the Egyptian market. They're the largest UN supply buyer. So regional spot prices for your crop commodities: hard red spring wheat is at 439. Hard red winter is at 369. Durum is 6 to 625, depending on where you go. Corn is at 321, canola is at 1329, and oil sunflowers are at 1468. So, moving into the beef market, on the board, live cattle have dropped from the 135. We kind of ended January, beginning of February, hit some highs there, and now we're down 130 to 132, trading right around 131. April cattle, 130 seems to be a bottom resistance level. So if it breaks through that, look at 127 or 124 to be some of the past levels below that resistance levels below that. Feeder cattle for March, contracts are trading lower into the low 150s. Trade is down from like 158, had kind of been up around the high 150s, low 160, seen earlier this month. Market low yesterday was a $1.47, and it doesn't seem to want to drop below that. $1.47, $1.48 kind of resistance level on those trading. In the cash market, live cash cattle traded at 134 for the first week of February, and moving into this week, we've been down into 132. Regionally, market prices for cattle: 300-pound steers, 245, 400-pound steers, 218, 500 weights, 194. 600 weights, 174, and 700 weights at $1.60. So that's where we're at in the market. So I'll turn it over to Ryan for our topic of the day.
So today we're going to talk to you about topsoil. If you don't know what topsoil it's that uppermost soil layer. It's a high concentration of organic matter and microorganisms, and it actually takes 500 to 1,000 years just to form 1 inch of topsoil naturally.
It's quite a bit of time. It's not a renewable resource by any means.
No, definitely not. And with this, we had some very high winds this past weekend, and we saw a lot of black black ditches, black snow.
Yeah, I've always joked about eastern Montana, western North Dakota. We don't get snow, we get snert. It's a mixture of snow and dirt.
Snow and dirt, yeah. And when that topsoil is leaving your field and ending up in the ditches, that's not the best for your bottom line.
No, as far as land rents are still high, and you purchased ground recently, when you went in to make that work, especially if you had to go into the bank for your operating note or for picking up that ground, you figured on a certain ROI. You figured on a certain amount of return, cash flows off of that ground to make the budget work for that capital outlay. And now, preserving that soil and properly managing your topsoil helps ensure a steady return or steady revenue stream off that ground. You can't see the desired returns and your expected returns when your topsoil's in the ditch or in the neighbor's field. And especially as we're looking for ways to lower our inputs. We just talked about how farmers are facing 10-year lows for the wheat producers. So you're looking for ways to cut your costs because your revenue is not going to go up. And soil loss is going to equate to higher fertilizer costs. So there's definitely an economic gain to be had by having proper soil management.
And there's some great ways to reduce that wind erosion. There's an NDSU, University of Minnesota extension publication. A few of these ways are to reduce your tillage, put out a cover crop with those early season crops. You can cover the soil during the winter and the early spring or the next year. You can leave some residue standing out there to lower the wind erosion, and you can plant strips in those areas that have high erosion. And the go-to, plant those windbreaks or shelter belts. With bigger equipment over the past couple of years, people have taken a few of those out, but with the way things are, you might want to put those back in.
Yeah, we saw some of those windbreaks when you had the unseen, unprecedented returns per acre before. You saw some of those. I mean, it was only 6 acres, but it was a lot of return. You saw that tore out. So maybe now with these lower returns, it's time to look at putting those windbreaks back in, potentially.
Definitely. And that's all we have for you this week. Have a good one.
Thanks for stopping by.